Imagine planting a small seed today and watching it grow into a huge tree over time. That's exactly how investing works. The stock market has created countless millionaires, but most people never start because they think investing is complicated or requires a lot of money. The truth is, you can start investing with as little as $10. In this video, I'll explain exactly how beginners can start investing in stocks, step by step. What is a stock? 030 to 115. Before investing, you need to understand what a stock actually is. A stock represents a small ownership stake in a company. When you buy shares of a company, you become a part owner of that business. For example, if a company grows and earns more money, its stock price often rises. That means your investment can grow as well. Some companies also pay dividends, which are cash payments made to shareholders. The goal of investing is simple: buy assets that can increase in value over time. Step 1. Open a brokerage account 1:15 to 2 o'clock. The first thing you need is a brokerage account. Think of it as a bank account specifically designed for investing. Many modern investing platforms allow beginners to start with very little money. When choosing a brokerage, look for low or zero trading fees, easy to use interface, good customer support, strong security features. Opening an account usually takes only a few minutes. Step 2. Start with index funds or ETFs 2 o'clock to 3 o'clock. One of the biggest mistakes beginners make is trying to find the next big stock. Instead, many successful investors recommend starting with index funds or ETFs. An ETF is a collection of many different companies bundled together. Rather than betting on one company, you're investing in dozens or even hundreds of companies at once. This reduces risk and helps create more stable long-term growth. For most beginners, broad market ETFs are often a simpler choice than picking individual stocks. Step 3. Invest consistently. The secret to successful investing isn't finding the perfect stock, it's consistency. Imagine investing $100 every month. Some months the market goes up, some months it goes down, but by investing regularly, you buy at different prices over time. This strategy is called dollar cost averaging. It helps remove emotions from investing and encourages long-term discipline. Many investors build wealth simply by investing consistently for years. Step 4. Think long-term. The stock market goes through ups and downs. Prices can drop suddenly, and that can scare beginners. But historically, long-term investors have generally been rewarded for staying invested. Instead of checking your portfolio every day, focus on where your investments could be years from now. Investing is not a get-rich-quick scheme. It's a long-term wealth-building strategy. Patience is one of the most valuable investing skills. Conclusion. To recap, open a brokerage account. Start with diversified ETFs or index funds. Invest consistently. Stay focused on the long term. The best time to start investing was years ago. The second best time is today. If you found this video helpful, like, subscribe, and follow for more finance and investing content.